Everyone, I am Ronica Brown. Welcome to this live session on how to determine if your business is generating cash flow each and every month. This is a two-part video, mainly because I haven't figured out how to share my screen yet with Facebook Live. And it seems like you have to do a different demo to be able to record your screen. So I'm gonna show you an actual example on my screen after I finish with this post. And right now I'm just gonna go into some of the detail. So what really is cash flow in your business? And often in order to, so cash flow is basically the money that comes in and out of your business. And when you're looking at your cash flow, a lot of business owners, the number of times you look at your cash flow will be based on how large your business is. So I have clients that they use my daily cash monitoring tool in order to just keep track of their cash flow because they have so many expenses, so many charges that are pending, and everything that they really have to stay on top of, how much money that they really have. So the question that I normally get is, why can't I just look at my bank statement? What I normally say is, yes, you can look at your bank statement if you're the only person in your business, you don't have a lot of expenses, you don't have a lot of things that going in and out of your business. Hi, everyone. But once your business start growing, once you start investing more time, hiring more people, having more expenses in your business, then your bank statement is not good enough. And the reason why is because your bank statement, just like your QuickBooks, only tells you what's already happened in the past. It does not show that payroll balance that your payroll company just ran and it has not hit your account as yet. It doesn't show you that credit card payment that need to be processed tomorrow or that payment that's due tomorrow that need to reduce your bank balance. And also it doesn't show you how much money you're going to end up with at the end of the month so that you can plan accordingly, plan your expenses, because one of the number one reasons that small business owners face is cash flow, limited cash flow, and how you can generate that cash flow in your business. Now, a lot of references to cash flow normally has to do with just bringing in revenue. So, that's the top line numbers. But what happens when you bring in revenue? It costs money, right? So there are things that you have to spend out after you start bringing that revenue. So, how do you make sure that the money that you're bringing in is making enough margin so that you're able to also have money going out and have money to keep? So when I talk about cash flow, a lot of time, what I want to talk about is basically the money that you get to keep in terms of cash in your bank account at the end of the day. So if you, as I said, if you don't have, contractors to pay or employees and a lot of expenses, then, this should be a walk in the park for you. But it becomes a little more complicated when your business start growing, and I hope everyone is in business for it to start growing and for it to, accumulate some cash so that you can have some more cash at the end of the day. So I'm gonna go ahead and switch to my screen demo so that I can show you examples to see what basically trips up a lot of business owners, why sometimes you really think that you have more money than you really do, and then you get caught in surprise, or in 2 days later you're struggling when you thought that you had like a large balance 2 days before. So join me in the next session when I go ahead and switch over to my screen share. Hi everyone, welcome back to my live session. And here on my screen, I hope everyone is able to see my screen. I'm gonna go through right now. If not, then guess what? I'll just do it over again. Use some simple numbers here for me to be able to call the numbers correctly, and also because it works out better in my mind and to keep things simple. So here we have someone say that they brought in $10,000 and their expenses turn out to be $5,800. Then they'll say, that term of profit, so that they made $4,200 every month. But when you look at it, your bank statement, so if you're someone who like myself, who charges your monthly expenses on your credit card for whatever reason that you choose to do so, then your bank statement is going to show only the actual cash that got moved from your bank account. Say that you pay yourself directly from your bank account to cover your personal expenses. So your bank account is going to show that $5,000, right, in lieu of that 4,200. So a lot of business owners, they get excited when they see that amount, because for somehow they completely forget that this $800 was charged on a credit card, and that they still owe that balance and need to pay that balance. So they get excited at this point. There's more money in the bank. So a lot of people, they may just go ahead and pay themselves, or they may go ahead and, start doing additional extra stuff with the money that they didn't plan for. And guess what? The end of the month comes around, or, the quarterly payment comes due, and, the cash is not there. So here, if you look at, other payments, you have, credit card payments, and, you reserve for federal income taxes. So if you, say for instance, you have a credit card balance of like $6,500 and something like that, and you normally want to pay $1,000 a month. So whatever your current operating expenses are, you want to make sure you also add that to your current minimum payment that you're trying to make. So since you already start making a payment of $1,000 per month, I would say that you'd make your new payment for that month be $1,800, because you charge an additional $800 for that month. And the reason why I say that is because your credit card balance is going to start increasing and increasing, and before you know it, you may inadvertently end up with a larger credit card balance than you ever wanted to have. So you want to make sure that if you have the cash, that you're going to cover your current month charges. And then if you're trying to pay off a credit card balance, you want to making sure that you're making a payment towards the previous balance that you've had, and also towards the current, and then you're covering the current charges that you're making. There are exceptions to this. So for instance, you made a $5,000 investment or a $10,000 investment into, let's say, marketing, coaching, or whatever that's going to help you to grow your business. Then there's an exception to that. You know that now you're not generating that money, but it's an investment in the future that you know that at some point, 2, 3, 4, 5 months down the road, that you'll be able to see the return on that investment, the ROI on that, 5 or whatever amount that is, so that you'll be able to see the revenue coming in to cover it. And the next big one that also trips up a lot of business owners is the estate tax payments. So the big recommendation for you is to have a separate bank account for your tax payment, that you move that amount in every month. So instead of you thinking that you have $5,000, you would move that money to your tax account that you're going to go ahead and set up, so that you actually see how much cash you really have in your bank, which is going to end up be $1,200 that you have in your bank. So it's not going to be the $5,000, and that's where a lot of business owners get confused, thinking that they have more money than they want to have. And right down here, when you take a look at your credit card balance and the amount of cash you have, you will also see that when you have more debt than your cash, then your business is going to be in sort of like a negative net worth. Like, if you think about it in your personal financial life, that if you have more debt than assets, then you have negative net worth that you're paying towards those liabilities. And the same applies for your business. So even though you're going to say, okay, I have cash of $3,200 or $1,200 based on what your beginning cash balance is from the previous month, then if your credit card, your line of credit, your tax debt is also a big one for business owners. If that's larger, then your business will have a negative net worth, and you want to make sure that whatever these monthly charges are, you're able to cover it with the cash that your business is generating each month. So the takeaway is, basically, don't get blind. Don't get confused that you may have more cash than you need to because you didn't project or factor out the things that are coming up at month end, like your credit card payments, payment on your old balance plus on your new charges that's coming up. And that's the only way that you don't have your credit card balance climbing inadvertently, because a lot of people don't plan for the credit card to climb, and sometimes the small operating expenses that you're charging every day and not paying off, those are the things that adds up pretty quickly. And then to create an account for your income tax so that you can move that money away so that you don't get fooled. One morning you wake up, you completely forget about all the other things that are going on, and then you think, oh wow, I have so much more money than I actually have. So let me know if you have any questions. Of course, I'll be happy to answer all your questions. Hope this was helpful, and I will see you in the next video. Thank you so much for watching.